Are you ready to go over how things are looking here ahead of the big personal consumption expenditures report that is coming out tomorrow? I hope that you are, because so far we have good news. And I think that we are going to show that we are now really, truly looking at a reduction in home loan interest rates. Today is November the 30th, 2022. It is 3:49 p.m. Central Time. Tomorrow is the announcement of the October reading of the personal consumption expenditures report, which is going to make a big difference in the direction of home loan interest rates for the next few months. Now, I was talking to you yesterday about the fact that there was something happening today that not many people knew about that could affect home loan interest rates either positively or negatively ahead of the report that was coming out tomorrow. Was the announcement, or I shouldn't say announcement, it was the meeting and the speech that was held by the chairman of the Federal Reserve Board, Jerome Powell. Because if he said things that sounded like they were going to continue to dramatically increase the federal funds rate, the home loan interest rate world would not really like that. Now, if he said something about maybe allowing the federal funds rate increases to be reduced or begin to subside, that would be good news for the home loan interest rate world. So let's take a look and see. Here we are now. Again, it is now 3:50 p.m. This report came in at 1:30 p.m. Eastern time, which would have been 12:30 Central Time. So 3 hours ago. And the Fed Chairman Powell says smaller interest rate hikes could start in December. This is exactly what we wanted to hear. So how did home loan interest rates respond? Well, let's take a look here. Look at this. Earlier in the day, ahead of this report coming out and in concerns of this report coming out, we were down 25 basis points on the mortgage-backed security. We are now up 81 basis points. That is a major move that is in the direction of home loan interest rates going down. This is a great move for the mortgage-backed securities today. A wonderful day here. Look at the 10-year Treasury. We are at 3.60. This is a number that we have really wanted to get back down to, and under was that 3.6. Take a look at the charts here. Okay, so first of all, you see that we broke through this a 100-day moving average, which is something that we needed to do. We were battling in this range, and just the comments from the Federal Reserve Chair allowed us to break through. Now, here's the other thing, is that we think that a lot of bond investors are getting in front of the report that is coming out tomorrow, the personal consumption expenditures report, because this is a huge report. It is a report that comes out, just about every month, but this time we're going to see whether inflation is beginning to truly subside. Let me show you what I'm talking about. Okay, so first of all, the two reports that we look at closely are the personal consumption expenditures report, and also the consumer price index. Okay, so the consumer price index came out November the 11th. All right, let's take a look and see what happened to the bond market on November the 10th. This was when the consumer price index report came out, and it showed inflation subsiding on that report. Okay, so that is their second favorite report when it comes to measuring inflation, the Federal Reserve. So look at what a great day we had when that report showed inflation subsiding. Now, we have not had a personal consumption expenditures report for the month of October yet. That report is coming out tomorrow. This was the consumer price index report for October. So if we have a great report come out tomorrow on the personal consumption expenditures report, we could rock it and maybe even go up against this Fibonacci level at 102.788. This is a major day for us. So what is it that we want to see? What number do we want to come out for the personal consumption expenditures reading for October? Okay, so let's take a look at a chart that I have shown from time to time, a chart that I put together here that shows the core personal consumption expenditures reading. Now, this is important. If you don't watch this show very often, there's the personal consumption expenditures reading, which is the headline number, and then there is the core personal consumption expenditures reading. We want the core number. So we're going to be looking for the core number. And the way this works is you get a reading each month, which is basically showing the inflation rate for that month. But what we want to do is take the report for, let's say it is for October of 2022, and it will now replace the report for 2021. So when they do a 12-month rolling average, we're kicking out October of 2021, replacing it with September of 2021. And I've tried to illustrate that here in this chart. So let me get over here to this chart. Okay, so here we are showing that the September report came out at 0.5. Now that is not the lowest number. That was probably the last of the high numbers. That's the way we're looking at this. Is that September should be the last of the high numbers. So if we are going to go in now, we're going to go into October, what we need to do is we need to replace the October of 2021 number, which was 0.4, with a number lower than 0.4. So a 0.3, 0.2, 0.1, and we are in business. That is what we really want to see, because that will show inflation subsiding. And that is what home loan interest rates want to see. So let's just go over here on my kind of interactive chart here. Now we are dealing with the reading of October. So if I go down here and I say, okay, we're going to replace this 2021 with not 0.4. See, right now I have it matching in order for this number to be the same. This is the year over year number, which is the aggregate of all of these combined. Okay, so let's say that this comes in at 0.2. So we go 0.2. Now year over year inflation is 5 instead of 5.2. So that means that inflation is now subsiding, and we are going to then be able to replace a bunch of high numbers. 0.5 is a high number. So if we're going to replace first a 0.4, then a 0.5, then a 0.5, then a 0.5, these are all high numbers, which means that we have a lot of expectation of being able to have numbers come in over the next 5 or 6 months with inflation numbers below 0.5 on a month-over-month reading, which gives us a reduction in year-over-year reading, showing inflation is coming down, and interest rates will be able to come down as well. So where are we on our home loan interest rates today? So let's jump over to, where are we? Okay, so let's look at our Brent Bruce daily reports. Okay, so let's go to our scenario here. Now remember, this is the very well qualified 30-year fixed conventional client. Let's go in here and run the numbers of where we are right now ahead of the personal consumption expenditures reading that is coming in tomorrow. We are currently sitting at, let's see here, that is not correct. Let's modify this. All right, so we were talking about 6.375. Let's go ahead and run this number here. The Brent Bruce Daily Conventional 30-year fixed. Where are we right now? That is correct. We are at 6.125. Yesterday we were at 6.375. We are at 6.125. And for a point, we are at about 5.875. Okay, so this is the lowest Brent Bruce Daily Conventional 30-year fixed interest rate we have had in months. Okay, that is because we're at 6.125 because of this great reading right here, up 80 basis points today. And also, if you watch this show often, you know that banks anticipate the reports that are coming out and they try to get in front of them. So normally they would say, well, let's hold back on the interest rates. Let's leave the interest rates a little bit higher at the end of today, because what if the report comes out as a surprise and it's not as good as we think it might be? They want to basically hedge their bets and reduce their losses. Well, in this case, it looks like even the banks are confident, so confident that the personal consumption expenditures report is going to come out showing inflation subsiding, that they're trying to get in front of it today to try to secure some more clients. Okay, man, I'm getting a little bit excited about this here. So we are currently sitting again at 6.125% on our 30-year fixed conventional loan. Here is the scenario that I always like to show. This is the program that I am quoting, just to make sure everyone understands that. I also want to point out the other day I had someone say that the rates that I was quoting are a 2-1 buy down or a 3-1 buy. No, they're not. They're straight 30-year fixed mortgages. Guys, if you don't believe these are the real rates that I offer, give me a try. Shoot me a transaction, and I will show you that these are the real rates. Okay, so what do we expect is going to happen tomorrow? Well, if home loan interest rates come in, the mortgage-backed security market goes up another 78 basis points like we're seeing here, and we're able to jump up and maybe even bang on this Fibonacci level at 102.788. Guys, I am pretty confident that I am going to be able to quote to you that the Brent Bruce Daily conventional 30-year fixed will be in the fives with no points. 5.875, 5.999, 5.75. I believe that in the next 2 days, probably by this weekend, we will be talking about 5%, high 5% rates with no points on a 30-year fixed conventional home loan. That is a tremendous reduction from the 7.25, 7.125 that we were talking about just a few weeks ago. And it is well on the way to being in the fours, which is my prediction that we will be in the fours before July 1st. So we are basically halfway there already, and we're not even into 2023. Good news is coming, guys. Home loan interest rates are going back down. So make sure that you're ready. Keep planting seeds with your clients, with your customers, with your friends, with your families, and talk things up because interest rates are going back down. Let me know your thoughts, questions. Make sure that you like, subscribe, and share. I look forward to getting back to you. The personal consumption expenditures report comes out at 8:30 a.m. Eastern time. So we'll probably get a report out to you quickly in the morning. Now, remember, this is all an expectation that we will see a reduction in inflation based on the personal consumption expenditures reading for October. If it does not come in that way for some reason, we might see just as dramatic of a negative effect to the improvements that we have already seen. Have a good day. I'll talk to you again tomorrow.